Hello, my dear traders worldwide. This is Gabriel. Welcome back to my channel, Forex.Real.Trader coaching sessions. Today, it's one of the videos that I want to use in order to close this series of technical analysis focused on candlestick patterns. But this one is more than a candlestick configuration, right? This is a pattern. The name of this pattern is bullish flag. Okay, let's first understand the structure, the configuration of this pattern. This is basically a multi-candlestick pattern formation. Is something that we have to identify from the big picture of the charts. Okay, how is it constructed? Basically, what you have to analyze is, and the flagpole, as you can see here on this graphic, the flagpole is basically this part, right? This area, okay? So that area must be strong, steep, and the price movement, of course, has to go upwards because it indicates an impulsive movement, right? The very flag, right, can have two options, right? Could be a small downturn sloping or a sideways consolidation, okay? That follows the flagpole. So it's exactly this area that you can observe in there. When we trade these patterns, we got to be very careful because we need, of course, the confirmation in the moment of the price break, right? When there is a breakout in the price, that is the moment to enter, okay? Because this is a very profitable pattern in the markets, all right? So let's go to our real charts now on MetaTrader 5. Let's see here. Okay, here we go. I previously take a look to my charts in order to save time in the video, because I know time is pretty valuable in these cases. And look at this. All right, check this out. As you can see from the zoom in, is not very evident. But if we zoom out this thing here, look at this. I can perfectly observe the flagpole and the very flag, right? So as I mentioned before, what you have to check in here in this area, right, is basically the pole. Okay? It's a steep, right? This is a steep bullish momentum. Okay. Of course, you can observe in here that the trend is clearly upwards, right? So this is a bull trend. Many things indicate that to me, right? For example, the EMAS, the configuration of the EMAS, right? That continues higher highs and higher lows. So everything, the trend is telling me I'm going up, I'm going long, right? So that is the thing in there. Now, how to identify the very moment to trade? Look at this. I'm going to zoom in now. All right. So you can observe here a slight downward, right, movement here. So this is a slight, soft downwards, right? Okay, that is one of the conditions. The second thing that I can observe, of course, is this one, that the flagpole is going up. All right, so what are my first indications? First, I have a steep flagpole, right? That's it in the pattern. The second thing is that the very flag, right, in this case, is slightly downwards. Okay, that is a nice indication as well. Okay, what is the third thing that I can use? Remember, and this is the moment to tell you this, it doesn't matter if I am trading a single pattern, right? I don't know, a doji or a hammer, something like that, or I am trading a pattern like this one. I must always rely on my other indicators, on my other instruments, on my platform, and basically on my trading plan before executing any trade. Okay, so that is critical in this aspect. I do not solely rely on the flagpole to execute the trade. Okay, so this pattern, the flagpole, aligns pretty well with two indicators. One of them is the stochastics, okay, and the other is the MACD, two lines, right? Why this? Pay attention to this observation in here. You trade the flagpole pattern not when, obviously, when it is starting the formation, because we don't know that's going to be a flagpole. You start trading or considering to enter when you observe that the flagpole is completed and the flag is in that process of formation. So when you identify either sideways or slightly downwards, is because you start observing and you say, okay, this is an interesting pattern that I might enter, right? But here's the point, in what moment you enter. Let's suppose that you have already identified both the flagpole and the flag. When we trade flags, we can fall into the trap of false breaks. So you need to first check the behavior of the indicators. So let's see the behavior for stochastics, for example. My stochastics is showing me in the moment, here in this moment. Look at this. That is the reason because I like to trace these guidelines. So here in this moment, for example, here, I can see that both MACD and stochastics are on the very button, right? Indicating that there is a sell pressure. So here, my MACD, the red line indicating bear, and my stochastics is showing me that it reached along the formation of the flagpole, it reached the oversold area, right? Oversold area. But then in this very moment, it's showing me that somehow bulls are taking control because the green line is above the red dotted line. And the line of my stochastic is pointing upwards, right? It's going bull. So that is a good indication. So this is the moment that I make the decision how to trade it. Okay. The right way to do this, once I have detected everything here, is to basically determine my entry point. There is something that you will observe along the construction of the pattern, is that in this case, we have lower lows, lower lows, lower lows, lower lows, lower lows, right? And lower highs, but somehow in a range area. They are not very drastic fallings, okay? No, it's basically within the flag construction. So my entry point when this candle is formed and closed, I'm talking about this very green candle here, this one, okay, this one, this candle. This is my entry, okay? This is my entry. But remember the rules in here. Be patient, okay? And be disciplined. Follow your trading plan all the time. So in this case, when this candle closes, this one here, this very green candle closes is where I'm going to enter, right? So that is my entry point. All right. Let me delete this line here. Remember, this candle where the purple line is on, this is the very candle when it is closed that I'm going to make the decision of enter the trade. Okay, so let's do this. So let's set it in here. My entry point is right above this long, strong bull candle. So that is me here. Okay. That is my entry point here, right here. Okay. Now let's calculate my stop loss. The logical dictates here that I should use a very important support area here. And that support area is given by the EMA. So this line in here, this exponential moving average, is giving me a nice indication of support, right? So that is one thing. Another thing is I can use my Fibonacci levels. So I'm going to trace it here, okay? And I can see that right here, okay, on this area, the 23 between the 38 point, okay, which is a very important support area, there is nothing. So I could ideally set my stop loss on this area, right? Right below the lower low of this candle. Right, let me show you exactly what I'm doing here. Okay, my entry point is here on this candle. Okay, so I place my buy stop or my buy limit depending on the momentum of the price in the case, and I calculate my stop loss here, right on this level, below the EMA, and the EMA that I have in here is EMA 50, so right below the EMA 50, and within the range of my Fibonacci 38.2%, which is a meaningful support level in this case, right? So that is a nice, I have many things. I have the stochastic confirming, I have the MACD didn't confirm anything, right? This one was not a confirmation, but the stochastic did. The Fibonacci is giving me another indicator, and the EMA 50 is giving me another indicator. And apart from that, let's suppose that you have your trading plan pretty sound, pretty clear. So you will have many tools to be confident about taking this trade. All right. So let's calculate now the pips. So the pips that I have in here risking are 25 pips, right? So remember what I always mention in every video. My ratios should be 1 to 2 or 1 to 3. So if in my stop loss, I am risking, in this case, 25 pips, 25 pips. So my take profit ideally should be what? Should be 50 pips, right? If I want to be a race taker, more aggressive. So again, my stop loss is 25 pips. So my take profit would be eventually 75 pips. All right. So that is one calculation that I can make. That is one way of trading the flagpoles. So let's see where I get 50 pips. So here I can get 50 pips here. Look at this. I could set it here. Right here is my 50 pips take profit. Perfect. So that would be an excellent win trade. There is another way to calculate the take profit, and it's by measuring, and it's very aggressive, and it's by measuring the flagpole. The flagpole here goes from this lower low and this higher high, and that's around 100 pips. According to the doll theory, right? Remember that there is always impulsive correction, impulsive correction. And according to the theory, sometimes the impulsive movement after the correction somehow mimics the previous impulsive movement. That is the reason, because it's very aggressive. We don't know for sure. Okay. So that is another way. So you could calculate your take profit, not here. Let's use a second take profit option, lighter. So a second take profit option in which you calculate, you measure here the distance between the flagpole lower low and higher high, and you see that there are 100 pips. So from your entry point, you can also calculate from here to here. 100 pips is around this area in the 912 here, right? So that's the aggressive version. But look at this. Again, why do I insist a lot on patience? Because look at this. I am on the time frame 15 minutes. So you need to be very patient and let breathe every trade. So remember, every candlestick in here is 15 minutes, right? So in order for this entry that you had in here is going to take hours to reach here and more hours to reach there, if that is the case. Let's see the scenario. What happens? In the first potential for this flagpole, the first potential entry, take profit, is good because after some hours, you get your take profit hit. And let's see the more aggressive and the one that you measure the flagpole. Look at this. It was reached as well, but it took you more time, right? So this is, my dear traders, the way, or one of the ways in which we can trade flagpoles, right? What are the risks that we have in here? Basically, the false break. For that reason, I repeat, it's important to wait for the confirmation of this candle, or even this one. I could even place it here, right? Because that is giving me more tools for confirmation. All right. So this is a very nice pattern because it indicates that the trend is very strong in that direction, in the bullish direction, right? So thank you very much, my dear traders. The next videos will be about fundamental analysis and how important it is. I will be showing you some trades that I executed regarding the fundamental. And well, hope you're here. And once again, thank you very much for your support. Just a final reminder, if you find the channel and this information interesting, please like, subscribe, and share. Thank you very much. Have an excellent day.